In this video, we are going to look at some charts and data to see what the state of the crypto market is, especially while Bitcoin and crypto is being relatively boring and going sideways. What's up guys, Dirk here from intelligentcryptocurrency.com. If you are new to the channel, welcome, subscribe below, click that notification bell after you do so you don't miss any future updates. And to make sure that you never miss an update, get on my email list. The link is in the description down below. It's 100% free. You get on there, enter your name and email, and then whenever I upload a video, I'll send you an email to let you know. And also when there's important updates and all that kind of stuff, completely free, link in the description below. So before we get into today's content, just a quick note about our sponsor Prime XBT, who have sponsored the channel for the month. They call themselves a next generation trading platform that allows you to trade global financial markets using Bitcoin, USDT, USDC, and more. And it's actually even possible to trade crypto, stock indices, commodities, and Forex from just a single account. So they were established in 2018, so they've been around for a while. They currently serve clients in more than 150 different countries, and they provide top-tier liquidity and a wide range of trading tools while maintaining security, liquidity, and enabling a safe trading environment for everyone. So if you want to check them out, you can create a free account with them today. It's the first link in the description below. If you use the voucher code DIGGY50, you also get a deposit bonus. All the details are below in the terms and conditions, so check that out if you want. First link in the description below. All right, so the market has been kind of boring in a sense. It has been going sideways and not much is happening. As I've been saying for the last couple of weeks, I expect Q3 to be rather boring and trade sideways, potentially with a lower low or maybe even a capitulation type event, a further down sell-off before moving higher, potentially in Q4. Q4 tends to be the last 3 months of the year, October, November, December, when the crypto markets as a whole tend to have a favorable outcome, especially in the fourth year of a 4-year cycle. So in 2013, in 2017, and we are now in 2021. So that is still my theory, what I'm leaning towards. We're gonna have a boring next 2 to 3 months, and then potentially, hopefully in Q4, start moving higher. And then we'll have to see if that's going to happen, if we are going to get that blow-off phase in Q4, and if we're going to peak towards the end of the year, or if this bull market is actually going to continue longer for another 3 or 6 months past the usual cycle, meaning Q1 or Q2 of 2022. So while all that stuff is happening and we're just waiting for time to pass, let's just look at what is actually going on without, personal opinions, just purely looking at the data and the facts. So this is the crypto fear and greed index. It is at extreme fear. It is at level 20, and you can see the historical values. Extreme fear now 20, yesterday extreme fear, last week extreme fear, last month extreme fear. So usually sentiment is a very good indicator of where we are in the markets. And Warren Buffett's investment philosophy, like he always says, you want to invest when people are fearful, you want to buy when people are fearful, and you want to start being cautious and start selling when people get greedy. So right now, everything is pretty fearful. The sentiment around crypto is negative. It's fear. People think we're in a new bear market that's going to last another 3 years. So, just based on that theory, right now we're in a fear zone, which is a time where if you want to be the opposite to the crowd, this is when you start to look into DCA or start adding to positions or waiting for that moment during times like this, not when everything is at maximum greed for weeks and months on end. And you can see over here the fear and greed index over time. We put this on maximum. You can see how we've been at this fear level over here for a huge amount of time. If you look back in history, back to 2018, there wasn't much of a time period when we were this much time spent at the fear level over here. So you can see even in 2018, this was the capitulation of the bear market, of the 2018 bear market. You can see even then, the fear level was relatively short-lived before starting to move higher, and this was the capitulation to around $3,000. You can see here, we are hovering around this fear level for quite some time now. Even here, remember March 2020, huge sell-off event and the huge rally that followed afterwards? Well, similar thing, 2018, 2020, we're hovering around this fear. So that doesn't mean that the markets can't go lower, and it doesn't mean we're going to start going up tomorrow, but it means that there is some sort of indication that we are getting closer to a point where we might have that capitulation, or where we might start going up in the next few weeks and months ahead. Then looking at various charts that are all available on lookintobitcoin.com. The links will be in the description below, so you can check this out for yourself. And this information is all publicly and freely available, so you can always keep an eye on it for yourself. But again, showing over here, so this is the 2013 cycle peak top of Bitcoin, 2017 cycle peak top of Bitcoin, and this is 2021. And as you can see, in both these cycle tops, we broke above the red band over here and above the red band. Here we didn't get above the top red band at all. In fact, we just bounced up against it and pulled back down, maybe similar to the 2013 rally, which spiked above it initially, pulled back down below it, and then spiked back up towards the end of the year. So I'm still leaning towards something like this happening. We bounced down. I don't think this is the end of the cycle, and I think over the next 6 to 12 months, we could be moving up towards the top and maybe even past that red band over here, which would take us past $100,000 in Bitcoin. This is the 2-year MA multiplier. If we're looking at the 200-week moving average heat map, so this is basically the 200 moving average. You can see the purple line over here. And the heat map basically depends on how far the price action extends beyond the 200 moving average. And you can see here 2013, 2017 cycle tops. The further it extends, the more the color changes, and you can see the further it extends, the more it becomes red, right? Cycle peak top, red, red. And the reason for this is that basically the price can't extend too far from the moving average before it pulls back and has a correction. So once it starts getting to these extreme temperatures, well, then basically it's time to start getting cautious. We didn't even make it to orange or red at this point in time, and we have started cooling off again. You can see we're in the blue zone. So that means there's a lot of potential to move to the upside before another pullback or recovery is needed in terms of being overbought. Let's move over to the Puell multiple, and you can see the formula for how it's created is right over here. I'm not going to go into that specifically on how it works, but mainly just look at the chart because that reveals enough. Okay, so you can see the price action over here is the black line, and this is the oscillator, the Puell multiple. Green is traditionally a good buy zone, and the red becomes a warning zone. Okay, so 2012, very good buying opportunity over here. 2015 over here, very good buying opportunity. 2018, the bottom of the bear market, very good buying opportunity. 2020, good buying opportunity. So we have recently, thanks to this multi-week sell-off, pulled back into the green, which, as you can see, 1, 2, 3, 4, 5 times since 2012, when it got into the green, it ended up being a really good buying opportunity. So what does that reveal about the future? There's no guarantees, of course, but I think that's a pretty good track record and indication that over time, this drop is going to have proven to be a good buying opportunity, and that the markets are still going higher. And you can see there is a long way left to get back into this red zone, which we didn't even get into. In the 2013 cycle top, way into the red zone. 2017 cycle top, middle of the red zone. Here we didn't even touch the bottom of the red zone. So again, this leads me to believe the bull run is not over, and we still have a lot higher and a lot longer to go. Another type of chart, an indicator, the MVRV-Z Score. Again, the formula, we're not going to go into how this works. Just look at the chart. Look at what happened in the previous times. Green zone, good time to buy. Red zone, warning zone, time to sell. That is really how simple it is based on these charts and indicators. So 2012, bottom here. 2015, again, the bottom, perfect time to buy. 2018, the bottom of the bear market, perfect time to buy. That crash in March 2020, perfect time to buy. So we are not back in that green zone at all, unlike the Puell multiple, which was briefly in the green zone. So this could still go a little bit lower, but the closer we get to the green zone, and especially if we touch the green zone on this type of indicator, well, again, the previous 4 times that this happened in 2012 were all really bottoms and good times to buy Bitcoin, right? You can see, and the tops were in the opposite way at the red. 2013 cycle top above the red zone. 2017 cycle top above the red zone. We didn't even touch the bottom of the red zone. So again, similar to the other charts and indicators, this leads me to believe we are not done yet. We still have a lot higher to go and a lot longer to go. And once these start getting to these red zones, well, then it's a time to start getting cautious for the end of the cycle top and the bull run. which could potentially lead to another multi-year bear market once that happens, but we are way not at that level just yet. Finally, one more, the reserve risk. Once again, the formula is here. You can check that out for yourself. Look at the indicator, okay? Green zone, time to buy, red zone, time to sell. That is how it works. Green zone, over here, bottom of 2011, perfect time to buy. Over here, 2015, perfect time to buy. 2018, perfect time to buy. 2020, perfect time to buy. Over here. Now, we are not yet at the green again, but we are getting pretty close to it. And again, if that does drop into the green on some sort of sell-off, which I think might be a possibility in the next 2 to 3 months during Q3, then we are seeing a signal that the past 4 times in the last 8 years that this happened, 4 out of 4 times, every time, it has been an amazing buying opportunity in hindsight. So if that happens again, based on the track record, the odds favor that that is going to be a very good buying opportunity. And at the same time, once this gets into the red zone, you can see 2013 cycle top, perfectly in the red zone, time to sell. 2017 cycle top, in the red zone, time to sell. We didn't touch the red zone yet, again, leading me to believe that we have further and longer to go in this bull run, and it is not over. So let's move over to the stock to flow, and specifically this, the stock to flow deflection, meaning how far this is deviating from the stock to flow model. And you can see over here the deviation from the stock to flow model is incredibly big right now. And you can see over here, it hasn't actually been that low since before 2011. You can see that. And when the cycle top happens, you can see the deflection is to the upside, the deviation is to the upside. You can see over here in the red peak, we are at a downside deflection of the stock to flow model. So moving over to the stock to flow model, you can see the peaks in the last 2 cycles have completely overshot to the upside of the stock to flow model, which is the red thin line over here. So, okay, so 2013 peak, 2017 peak. Right now, we are below the projection of the stock to flow model. And this would be highly unusual for it to be a cycle peak of any sort. Now, of course, it is possible that the stock to flow model ends up being wrong and that it doesn't end up working, but so far to this point, it has been accurate, and the odds favor, based on the previous 2 cycles, if that cycle repeats, that we are going to get an upside deviation above the stock to flow model, meaning that we are going to end up with over $100,000 Bitcoin if this model ends up being correct. And finally, one thing that's important to see over here also is during the sell-off over the past few weeks, you can see the growth of new users is now reaching new all-time highs, over 50,000 new entities coming on chain a day. Right? So you can see the net entity growth versus Bitcoin. So you can see here the net entity growth crashed hard after December 2017, abandoned ship. Right now, during the sell-off, our net growth has continued. So there is no similarity between this previous sell-off being a cycle peak top and the 2017 cycle peak top, based on this, where we had the massive sell-off in entity growth versus a continued growth of entities now during this recent sell-off. So again, guys, this is not financial advice. I can't predict the future. I can't make any guarantees of any sort. So always make your own decisions and manage your risk. But looking at all this data, it really points towards this being a mid-cycle sell-off, the bull run still being in full force, and even though we might trade sideways for a couple of months, and even though we might end up still having a final capitulation sell-off, maybe some sort of black swan event, maybe the stock market sell-off, who knows what's going to happen, some FUD on exchanges or something like that, it is possible we still get another sell-off and Bitcoin and the altcoins end up going lower than where they've been already. But I do think even if that happens, that would be a good thing, because it would wash out all the weak hands, the final capitulation sell-off, before we can start a big ascent and the final phase of this cryptocurrency bull run in the next 6 to 12 months. That is still my personal theory, and we are going to end up seeing how that works out. You know, we'll know for sure in 6 or 12 months from now. So let me know your thoughts. What do you think based on everything I've shown you here? What do you think about my theory about, you know, the bull run still continuing? Is this yes or no? What do you think? Leave a comment below. And of course, if you haven't subscribed to the channel, subscribe, hit the notification bell, give the video a thumbs up if you don't mind. I'd really appreciate it. And of course, if you are not yet on my email list, the link is down in the description below. Click that, sign up, so you never miss a future update of when I upload a video or when I have something important to share with you about the cryptocurrency markets. Thanks for watching, guys. I appreciate you, and I will see you in the next video.